Hello, very warm welcome. You're watching the weekly edition of Your Trades. This is Priyanka Uppal along with me, Snehi Shah. The show where we wrap the key developments for the week, macro cues, as well as the earning wrap and what looks ahead for the market next week. Now, this week was substantially surprising week, and of course, I think Snehi, we should call it thank God it's Friday that we've at least ended the week now, because Nifty clearly dropped 1.8% this week. Bank Nifty was nearly 3% lower this week. Small cap and mid cap, they were more hammered. Small cap was 5% lower this week, and mid cap lost nearly 3% week. Pre-election jitters continued, FI selling, and of course earnings impact to some extent. But then majorly the bout of volatility which came in because of the pre-election jitters, and the whole week this was a losing week for Indian markets despite strong domestic, stronger global cues. US markets, Asian markets, both are on a pace for weekly gains. Dow has been rising from last 7 days, but FIs has remained substantial seller throughout the week. They sold nearly 19,000 crore till Thursday figures. VIX, which climbed nearly 12 consecutive days. Today also, this was the 12th day today, and we are above 18 level. This is the highest level in last 19 months also. Macro factors though were supportive. Gold was steady. Oil continues to trade at 7 weeks low. Dollar index was steady, but completely on the domestic triggers, Indian markets were moving this whole week. Sectoral wise, if we talk about sector wise, FMCG sector, a little defensive buying we should say. FMCG, auto, these sectors were the top gainers for this week. This is because otherwise the whole screen was red. Strong comments coming in from rural recovery, which led the FMCG pack higher. Auto numbers, they set the tone right for auto stocks. Top gainers were amongst, because of the earnings only. Hero was the top gainer for Nifty. Britannia, completely on the rural recovery theme. Losing sectors were, the top losing sector for the whole week was PSU Bank, Energy, these are the top losers. Otherwise, other sectors also lost substantially this whole week. Shriram Finance, Titan, they were the top losers for this whole week. And of course, let's not forget, key earnings came in like L&T. However, there was a lower revenue growth, order inflow was lower, but then the kind of hammering we saw on stock, SBI, the kind of numbers SBI posted, then also Street did not share the results. So clearly, this was a week of defensive buying, and a clear selling was seen whole week, Snehi.
Well, absolutely. So that's overall the highlight of the week that went by on the earnings. But another major set of stocks that I would like to highlight over the course of the week, we had two norms coming in from the RBI. One was on tightening of project financing, and the other one was on the dispersal limit in terms of the cash dispersal that NBFCs have been undertaking so far. In terms of project financing, RBI came out with norms that provisioning will have to be hiked, and on the back of this, we did see some key project financiers like REC, PFC, they were sulking away even on intraday basis over the course of the week when this news came, and even on a week-to-date basis, you have PFC that's down 1%, REC has lost 8.5% over the course of the week that went by. Some major cuts coming in for both of these. But let's also address the second directive that came out from the RBI, wherein they said that NBFCs cannot lend more than 20,000 rupees in cash dispersals at once. So on the back of this, you had gold loan financiers, the likes of Muthoot, Manappuram, IIFL, all these three counters were lagging away. In fact, when you take a look at the week-to-date basis, you have Muthoot Finance that is down 2.2%, and Manappuram has also seen sharp cuts as well. But when this news came intraday, Manappuram was down 8%. Muthoot was down 4%. So lots of news flow coming around the RBI as well. And on the back of this, NBFCs were majorly in focus this week. Also, what else was key to note is we did get data coming from the AMFI, and SIP data touched new highs. It crossed the 20,000 crore mark as well. The mutual fund inflows were also really high this time. So good support coming in from the mutual fund space, but it did not do much to a jittery market as well. So largely, this is what the week has been going by, and also to make more sense about the week that we saw, and more importantly what to do, how to brace yourself for the week that's about to come. We're now being joined on the show by our guest for today, Rajesh Palve, our head technical and derivative research at Axis Securities, along with Mr. Ajay Bagga, chairman of Elements Platform and market expert. Gentlemen, thanks so much for joining us and taking the time out. Rajesh, I'm going to come to you first, since you're going to speak to us about the technical levels. Tell us what's next when it comes to the markets. We've seen some jitters coming in. Would you believe this is on the back of some pre-election jitters that we're seeing, commentary that the PM has been making, and or do you believe there are much deeper factors at play over here and the election result is largely priced in? We've also seen some FII selling, lots of factors that have affected the Nifty, especially this week. So what's your outlook on the levels next week, and what should the trade setup be like? What should investors do?
So definitely. Looking at the reaction in current week, that clearly shows that there is some cautious approach by the market participant at this juncture. Nifty broke below 20,200. That's a negative development near term structure. If it continues to trade 22,200.
Rajesh, we'll stop. We'll interrupt you in between. We'll come back to you. Let us fix. Maybe there's a technical glitch. But moving on to Mr. Bagga. Mr. Bagga, welcome to the show. Wanted to understand, since we understand there are strong global cues, but Indian indices were on its own downward spiral. Majorly, FI selling was one reason, but what is a bigger reason? Is this pre-election jitters that is creating nervousness, or is it the India's expensive valuation over peers in emerging market the bigger reason?
No, I think it's the election jitters, and you can't help it. It's going to go on for the next 3 weeks. June 1st, Sunday night is when we get the first exit polls, but that will not give any kind of substantive relief to markets. Only June 4th afternoon, when you get the major trends through, is when investors will finally settle down. There is no way anybody who's seeing 98 crores electorate, about 60 crores of them are going to vote, is going to get this right on a very consistent basis. In fact, only three rounds of the polling have yet gone through, and you're seeing the impact on the market. So a lot of fake news, a lot of fake media, a lot of assertions from both sides, a lot of negative campaigning, and a very extended 6 weeks election season, which has really, left a lot in terms of people's imagination. But I have seen this every time. In fact, I remember in 2009, there was a big chance that one of the regional party supremo, she would become the prime minister. And I had to present a paper on that to our headquarters in Frankfurt at that time, and analyze what it could do to the firm that I worked in India at that time. Election season brings its share of uncertainty. What one would have wished for was that we get a 15-day elections and are done over with instead of this 6 weeks, which is really killing the markets. We were at all-time highs. We have come down from there. So it is natural profit booking to some extent. FI selling, I think most of it is due to just cutting off some positions. It's not reallocation out of India. In fact, we had the Citi report today, which was more favoring India over China. China is still a story unfolding. We don't know how the property crisis end game will be. We don't know the overcapacity in China. Xi Jinping had a very dismal tour of Europe where nothing practically got done except shaking hands with small European countries. But otherwise, the substantive issues could not get addressed. So with respect to that, India is a shining story. Now, how well that translates on June 4th, I think that's the big question. So I would put down all this VIX all the volatility, 67% increase in India VIX in the last 12 days. All this is election related, and there is no easy way out. We will have to bear the pain for the next 3 weeks also. So even if we clamber up the stairs, we come shooting down the banisters or shooting down the lift. That's the trouble. So today you clawed back a little, and then when the selling comes, boom, it's double or triple of that the selling happens. So we are near a good support levels. Hopefully we don't go down much more than this. But even if we do, I think June 4th onwards, things will look much better. Right from 99 to 2019, if you see, within a year, you have much better markets. And leave aside the COVID, March 2020. But if you see just before COVID, the
Right.
markets did well, even for 19.
Absolutely, Mr. Bagga. Thank you so much for such a detailed explanation. That puts a lot about the market moves in perspective. But Rajesh, I'm going to come back to you. We fixed that audio glitch. Tell us about the levels that you're spotting and continue with your answer, please.
So in current week, Nifty is now slipped below to 50-day moving average, and now Nifty is trading almost near to its 100-day moving average. So it's very critical for the Nifty to hold out about 22,000 level. If it slips below to 22,000 level, then this sell-off can continue further, and possible down move can extend to 21,800, even 21,750 also. We have seen major call writers are now aggressive at 22,100, 200 strikes. So these levels on the higher side are likely to act as a major supply zone for any kind of minor pullback if we witness in coming trading session. So major supply zone is now placed at 22,200. If we able to take out these levels, then only some comfort buying or some short covering action we can see in the market. But looking at the broader market, the way most of the sectors have witnessed the profit taking as well as the short selling, that clearly giving us some signal that some cautious approach is taken by the most of the market participant ahead of this general election. The elevated VIX is also indicating that yes, there could be some more volatility, and bearishness is likely to be there in the coming trading session. Even on the bank Nifty, the major dent was there in the banking as well as in the financial stocks. Bank Nifty almost down by around 3% in the current week, and now bank Nifty is also trading below to 50-day moving average. The way bank Nifty has broke its important support area of 48,000 on a weekly closing basis, that clearly give us sign that if we continues to trade below 48,000 level, then possible supply pressure can extend, and then bank Nifty can also go down towards 47,000, 46,800 also. So I think one needs to be little cautious at this juncture until the 22,200 not taken out on the higher side, or on the bank Nifty 48,000 are not breached on the higher side. Until these levels are not taken out, I think one should remain on the cautious side. Some more bearishness is likely to be there in the market for coming week.
Okay, some more words of cautiousness coming in from Rajesh, and of course, Mr. Bagga was sounding also cautious at this point in time. In fact, he expects 3 more weeks of weakness or consolidation in the markets. We'll stay for a short break here. Both of our guests are with us. Don't go anywhere. Welcome back. You're watching Your Trades. Rajesh and Ajay Bagga are here with us. Rajesh, since we've closed above 22K, any hopes of... I heard you. You said that there's still a cautiousness, but then any hopes of a minor pullback coming week? What are the levels that give us the tough resistance? And in fact, the spaces which have fallen the most, will they be the first to recover also? Like PSU Bank or energy stocks? And what would be your recommendations for this week? Coming.
So Priyanka, I think the sector where we are seeing outperformance, they may continue further more upside, as the market was volatile, but the sector like automobile, metal, even capital goods, these sectors were showing some amount of buying interest, and some of the stocks were showing very good buying interest throughout the week also, despite of market was volatile. Though 22,000 is, yes, as we spoke, like, yes, it's a very important and critical support area for the Nifty. Nifty is already in oversold trajectory for near-term trend. Some pullback could be there, but again, the stiff resistance is placed at 22,200 250 zone. That needs to be, watch closely. Until these levels are not taken out, then I think the pullback will again, meet to the supply pressure on the higher side. So those who wants to trade for very smaller pullback, they can take some buying position around 22,000 level with very strict stop loss of 21,950. That needs to keep as a stop loss. To play this up move, some of the pockets where we are focusing at this moment, Zomato is looking very promising. The way stock managed to give breakout of last 3-4 week consolidation, and now again stock is now holding about 200 mark. So I think one can look to buy Zomato at this juncture. Zomato is looking promising, and we believe that this rally can extend for Zomato, and possible upside target for Zomato could be there around 215 to 220 kind of zone. So one can buy this stock with stop loss of 196. As we mentioned that we are holding bullish view on some of the metal space, and most of the metal stocks like Hindustan Zinc, Hindustan Copper, Vedanta, these all stocks have done well in today's session also. So Vedanta is our preferred choice at this moment. The way stock is holding the ground at higher level, and again the kind of the addition on the open interest is witnessed in today's session. We believe that Vedanta can exhibit good amount of rally in coming week. 425, 430 is the possible target. Vedanta is buy with stop loss of 402. And from automobile space, Eicher Motor is looking promising. Stock managed to give breakout of last 5-6 days consolidation range breakout, and the most of the automobile stocks are showing good traction. We believe that Eicher Motor can continue furthermore upside. 4750 is the immediate target where we are projecting. Keep your stop loss at around 4600.
Thanks so much for sharing your view as well as your stock specific ideas with our viewers. But Mr. Bagga, I'm going to come back to you. We're running a little short on time on the show, but I really want to get your outlook on the entire FMCG space. For the first time now in a very long time, we've seen rural demand is recovering. We've seen some improvement there. Even for the likes of Dabur, rural has overtaken the urban demand. So what are you penciling in when it comes to the entire FMCG space? It's done pretty well over the last 1 week. What's your view ahead for these stocks?
It's coming back, but we don't know, is it a function of defensiveness or is it really a re-rating of the sector? I think if it's a re-rating, it's ahead of the curve. We have to have a good monsoon and then see around October once this season's crop comes through after a good monsoon. Then we'll get an idea. So I think it's more defensiveness rather than any re-rating that has yet taken place. Valuations are not at all cheap. Good thing is under-owned. It's an under-owned sector. So I would say domestic cyclicals, your autos, your infra, capital goods, and financials, they are a much better bet than FMCG. But we'll wait and see. I think that will, a lot of it will depend on monsoon. And you could just see people selling off FMCG post June 4th and coming back into defense, railways, auto and capital goods.
Bagga, thanks so much for that take coming in. On that note, Rajesh as well as Mr. Bagga, I'm going to have to thank you on the show. Thanks so much for taking the time out and speaking with us. And thanks so much for sharing your views as well. But viewers, let's move on and let's address Tata Motors numbers. They have come out as well. Margin has come largely in line with what we were expecting here at ET. Now revenue has also come in line. We're getting the first set of numbers as of now, and revenue looks largely in line. PAT is where we have seen a very big beat coming in that has surpassed our poll and the street's estimate as well. We were expecting PAT to come anywhere around that 6,200 mark. And PAT has managed to break all of those levels, and PAT has actually come in at 17,529 crore rupees. So that's a very big beat coming in on the profitability front. Revenue also at 1.19 lakh crore rupees. We were expecting 1.2 lakh crores, but it's right around that number as well.
It's a big beat, in fact, Snehi. Revenue, it's about 13% of change in revenue, and EBITDA is about 32% change. And in fact, JLR has been always a crucial part. But then more details will follow up. But then we do have some comments also coming in, wherein management is very confident of delivering a strong performance in FY25 also. You have more comments?
Well, absolutely. We're also getting some commentary coming in from the management, like you mentioned. PB Balaji, CFO, he has said that the India business is now debt-free and they're also on track to become the net automotive debt-free on a consolidated basis in FY25. Positive outlook coming over there. But to make sense of these numbers now, we're being joined by Abhishek Gaushande, the Deputy Vice President of Research at Sher Khan by BNP Paribas. Thanks so much for joining us on the show today, Abhishek, and help us make sense of these numbers. The first look of these numbers right off the bat, everything in line, revenue, you have margins, EBITDA, all these three indices in line, but very big beat coming on the profitability front. What's your take? What's your first cut of these numbers?
Okay. So prima facie, the operating performance of the company is almost in line with their estimates, not on the console basis, but on the individual company basis also. JLR has reported a 16.3% margin, and the street was expecting the similar kind of a number. And same is the case with the CV and the PV segment. The beat in the profit, which is seen in the reported number, is largely due to the extraordinary item, and one of the items is that deferred tax asset of rupees 8.3 thousand crore. So adjusting to that, the numbers, the bottom line will again come in line or slightly better than that of the estimate, but largely we focus on the operating performance that is in line. Beyond that, there are 2-3 things which are also we need to highlight here, is that the company has paid dividend of rupees 3 compared to dividend of rupees 2, given that last year it has again started paying dividends. It's the second consecutive year when it has paid dividends. Second, the net automotive debt has almost come down to 16,000 crore. If you remember that the net automotive debt in Q1 FY23 was roughly 60,000 crore. So from in last 6-7 quarters, the net automotive debt has come down strongly. So the excellence which it has been building up in its operating performance, that has been reflecting in the correction in the net automotive debt and the dividend payment. So in considering that, the performance looks in line with our estimates.
Abhishek, the way you mentioned that, of course, debt reduction, and that's one big elephant has been one big elephant for Tata Motors also. But then how do you see the JLR profitability also? Because looks like operational profitability is quite similar to what we had in FY24. Any crucial details there?
For FY24, that I need to check, but the margin numbers which is in front of me saying that it has been consistently delivering EBITDA margin above 14% for last 5-6 quarters. So that momentum has been maintained. So I don't think there is anything negative as per se that what the reported numbers are in front of me.
All right, Abhishek, while we're talking about sectoral profitability and sectoral earnings coming in for Tata Motors, also take us through the PV and the CV numbers. What are you seeing on that front? And first look, it's seeming pretty good to me, but what's your takeaway here?
See, broadly, we were expecting roughly 11.8% kind of a margin in the CV business, and the reported number is coming out to be in the similar range. And for the PV, we were expecting around 7.5% kind of a number, and it is again 7.3%. So on that side, things are okay. But the thing is that now going forward, we may see some kind of moderation in demand in H1 FY25 in the domestic market. And most probably it is a consensus that H2 FY25 would be better than H1 25. In JLR case, obviously the order book is coming down from I think 1,48,000 to now it come down to 1,33,000. But that is also obvious given that production has been improving. For FY24, the company has delivered whatever it has been promised at the beginning of the year. Now we need to see that what management give us guidance for FY25.
All right, Abhishek, thanks so much for joining us and sharing your first take on Tata Motors numbers. Overall, a good set of numbers coming in, largely in line, but Pat has beat estimates. But Priyanka, talking about the week that went by, quite volatile, and all eyes will be on the trading setup next week.
Absolutely, and in fact, looks like as if market is completely ignoring the global setup. It's only on its own pace, and of course, thank God, it's Friday. I think we should say. Let's hope we have a fresh start to week when we come back on Monday with fresh triggers and maybe a fresh sentiment.
Well, absolutely. But on that note, viewers, we're completely timed out on this edition of Your Trades. Thanks so much for watching. We'll see you on Monday.
If you like this video, then like, share and subscribe to ET Now.